Hello everyone, welcome back to my channel. So in today's episode, I'm just going to give you a quick update on Bitcoin and the markets. Before I get into this video, I just want to make clear whatever I say in this video should not be considered financial advice, and I'd advise you to do your own research before you buy any cryptocurrency. Okay, so let's dive into BTC. So here we have, we're still in this downward ascending channel here. So we have some nice movement in BTC today. We do see it making a move to the upside. But if we just look at the step back and just look at the zoom out a little bit, and we see the on the daily chart, we see it's just fighting with the 200-day moving average. Now it did break out now, but it's now currently sitting below it. And again, it's below this bull market support band. Now, if we zoom into the 4-hour chart, we see that it's still in this. Trading range. Now, it did make a nice breakout last week, but then it just returned back into this trading range. Now, I would like to see Bitcoin break out of maybe 62K, and again, maybe break this this overall high. So when I label this video, don't be a hero, as wait until the market shows you a bottom before you put on any leverage trades. So when I say that, I mean that I wanted to break structure on the daily time frame. So to break structure, so this was a lower low, then this was a higher low, then this was a higher high, and then again, this is forming a lower low. But I'm not confident until we see the price action break this level. So this would be 64K. So that's my line in the sand. That's when I would be confident putting on leverage trades, because we don't know if price action is just going to whipsaw and come down to the downside again. So like the sentiment in the market is really, really bad. You can judge that off Twitter. Everyone's calling for the bull market is over. All the hedge funds, the big money, are not taking part. They've seemed to have lost interest. You can see that from the ETF inflows. So in my opinion, I'm not going to be overly bullish until Bitcoin breaks 64K level. So there's no point looking at any altcoins. Now I do have 2 altcoins that I will mention at the end of the video that I am taking trades on this weekend. And I have a reason for that, but I'll show you that towards the end of the video. Okay, so just back to BTC. So we're in this range, we're chopping sideways for the past 6 months. Now, I don't know what you want to call it. People call it the summer doldrums. Like, the big money is just taking vacation, and hopefully we will see some better price action maybe coming towards the end of September, start of October. Now, we do have a lot of headwinds and tailwinds on the horizon. We do see the DXY. So the DXY is starting to show us weakness. So as you can see here, so we could call this a lower high, and now it's starting to form a lower low. So hopefully this will continue to the downside. The DXY has an inverse correlation to BTC. So as the dollar weakens, more money seems to flow into risk-on assets like Bitcoin. I did point out this in my previous video. So more pain ahead for Bitcoin and altcoins. So I made it clear in that video that the market was showing weakness, and it wasn't forming a bottom just quite yet. And especially with people putting on leverage trades, it's you just get washed about the market. It just wicks up and down. It just wrecks people to the upside and the downside. So it's better to wait and buy into strength. Wait until the market is showing strength before you buy in and start putting on leverage trades again. Okay, so this week is a big week for the markets. So as you can see here, US economic data this week. So today is a Labor Day. So it's a Labor Day in the USA and Canada, as the volume is very low. Tomorrow, then we have the ISM manufacturing PMIs. And then on Wednesday, we have the JOLTS job openings. And then we have the ADP non-farm payrolls on Thursday. And then the jobless claims on Thursday, as well as the ISM service PMIs. And then on Friday, then we have the non-farm payrolls, and followed by the unemployment rate. And also we have the average hourly earnings also coming on Friday. So you're probably wondering, why do I have to pay attention to all this economic data? It's because Bitcoin now is becoming a mature asset class, and it's over $1 trillion. So it actually takes a lot of money to move the asset class. We need Bitcoin to break above all-time highs before we see any altcoin season. Okay, so moving into this week, all this data is very, very important for Jerome Powell, the head of the Federal Reserve. So he wants to assess this data, and then on the following week, then we have CPIs, which tracks inflation year on year and month on month. And obviously, the Federal Jerome Powell, he has a dual mandate. He has to see that if inflation is coming down, but also that there's steady job growth. So basically, bad news is good news for the up and coming data this week. We want to see unemployment rate tick up. So this is giving Jerome Powell evidence that the economy is weakening, and he needs to cut rates as soon as possible. So he did make it clear at Jackson Hole that he will be changing his policy and he will be cutting rates in January. But for us as investors, we want him to cut aggressively. So we want to see maybe 0.5 of a rate cut instead of maybe 0.25. The Federal Reserve is known for acting very, very slow. So we can easily slip into a recession if they don't act fast enough. And then obviously investors are looking at this data and they're very unsure, and the market does not like uncertainty. This is another reason that the economy is just doing well. So this is just in from Watch Guru. Just in, 2.8 trillion asset manager Goldman Sachs fires 1,300 employees. Goldman Sachs is one of the biggest banks in America, and it's laying off over 1,300 employees. So this just goes to show that the economy is just not doing good right now. So this was another tweet I seen from Kevin Swenson. BTC is on track. BTC is on time. If Bitcoin had already begun trending above its all-time high, it would have been very early compared to previous cycles. Q4 pump loading. So another thing we have to pay attention to is previous cycles, how they always kind of coincide with each other. And a lot of people, myself included, when Bitcoin broke out to all-time highs of early in March of this year, everyone got a little bit ahead of themselves and everyone was screaming for all season. And everyone was very, very bullish. But you have to understand patience. It's all about patience. Let the trades come to you. If you look at this graph here, we can see that in the 2016 halving, it took 40 weeks before Bitcoin broke to all-time highs. And then in the 2020 halving, it took 30 weeks to break all-time highs. So we're currently sitting, he's just showing here maybe Q4, which would be 35 weeks. Maybe then we'll break all-time highs, but we are yet to be on track. So we were currently only like 20 weeks away from the halving of this year. So we just have to be patient. The market is designed to just wreck your head and it'll chop sideways for ages. You have to remember the last 20% of the bull run, that's where you see most of the gains. So yeah, again, you just have to be patient. Wait for Bitcoin to show strength before jumping into any leverage trades. So I also seen this tweet from Easy Eats Bodega. So bull run hasn't started. Bear market bounce. Fight me. So the major key indicators for why it isn't: no new participants, no positive media narrative, declining on-chain volume, declining of on-chain wallets, no major consumer app, and centralized apps not in the top. He's just stating that there's no newcomers coming into the market. Now, this is obviously a lot of retail investors are still feeling the pinch when it comes to inflation. Rents are at all-time highs. It's just the economy is not in a good place, and we're going to have to see rates come down and maybe some stimulus from the government before we see new capital come in from retail investors. Or also what he's talking about, a new major consumer app. So I remember in the previous cycle, we had this app called Steppin. So it's basically you download the app, you walk or you run, and you can buy NFT sneakers, and the sneakers actually came out in the post. Now it had some Ponzi-nomics, but loads of people in Asia were using it, and it was all the rage, and it really caught on with the mainstream investors. So we need something like that just to get us out of this mold. But also, in my opinion, we have to wait until we see a proper rate cut from the Fed. Very interesting tweet here from Arthur Hayes. So my theory why Fed rate cuts aren't going to plan. So it is kind of cryptic, but I'll try and break down this tweet and make it a lot easier for you to understand. So since Jay Powell, so he's on about Jerome Powell, announced September rate cut at Jackson Hole, BTC, Bitcoin was down 10%. Why? I thought rate cuts were good for risk on assets. So the reverse repo program pays 5.3%. No treasury bill under 1 year maturity pays more. So money market funds will move from treasury bills to the reverse repo, which is highly liquid. It's obviously risk averse compared to Bitcoin. Since Jackson Hole, the reverse repo is up 120 billion. In my opinion, this will continue as long as T-bill rates are less than reverse repo program. So Arthur Hayes is going to break this down in more detail tomorrow. What he's talking about is, so the reverse repo program is where banks and big money market funds would sell equities in an agreement to buy them back at a higher price. And they can lock in a non-risk rate of like 5.3%. So basically, this is a lot better than buying treasury bonds from the government. So in my opinion, but this will all change when we do see aggressive rate cuts from the Fed. So again, it's all about patience and waiting for the Fed cuts to happen. So once the Fed rates happen, big money market funds then will have to reallocate their capital. And usually when rate cuts come down, money market funds then will be seeking higher risk because the dollar is a lot cheaper. So again, I stated this in my last video. So the last 2 months were negative for Bitcoin, and this is very, very rare to see a third consecutive month, especially in a bull market, to be negative for Bitcoin. But we do have this tweet here. Statistically, September has been the worst month for Bitcoin, while April is usually one of the best. Though this year, it wasn't. It's important to consider historical trends, but don't get too fixated. September could easily surprise us with another bullish run. Even though September is usually very, very bad for Bitcoin, he's saying that this kind could be different. So other keynotes to watch out for in September. So on the 10th of September, we have the US presidential debate. On the 11th of September, we have the CPI data, which is tracks inflation. And then we have, so on the 12th of September, we have PPI, so that's Producer Price Index. And then on the 18th of September will be the famous FOMC meeting. And this is where Jerome Powell will announce the rate cut. So fingers crossed that he will drop the rates by half basis point, 0.5 bips. And then on the 29th of September, we have the CZ of Binance is getting released from prison. But also we have something else to look forward to on the 20th to the 21st of September. We have Solana Breakpoint. So this leads me to the trades that I'll be taking this weekend. So the first trade is Solana. Now, Solana has, again, like Bitcoin, this downwards ascending channel, but it did come into this demand zone, and I do feel there's a good risk to reward, especially when we have Solana Breakpoint happening in 2 weeks' time. So usually during these events, it'd be kind of buy the rumor and sell the news. In my opinion, I do think we will see some good price action out of Solana over the coming week or two, just on the build up to Solana Breakpoint. Now, a good trade would be to buy this on spot, and I would take profits here around the 159 level. So this would be my take profits. So this would be my TP1. And then here would be my TP2. So my next trade then I'm keeping an eye on, is Jupiter. So if you know, Jupiter is one of the biggest exchanges, decentralized exchanges on Solana. So again, I find this just to be such a very good risk to reward trade, because as you can see here, price action is currently sitting on support here right at the lows. Now this is pretty much a new coin. Now this coin was only just launched this year. And so there is a lot of sell pressure and a lot of VCs involved with this token. So there is a lot of VCs selling, dumping on retail investors. But I just think where it's positioned now, I do feel it's a good risk to reward. If we just see where it is now to all-time highs. So we just take the measuring tool and bring it up here. So to get back to all-time highs, that's 133%. So overall, I do feel with the up-and-coming Solana Breakpoint, this would be a good trade to get into. Now again, I'm just loading up on spot. I'm not using any leverage. But just going back to Bitcoin and its price. So this is the ETF inflows. So as you can see here, the last four, now today was was a public holiday, so there are obviously no inflows today, but previous 4 days were all in the red. So this is obviously not good for price action. And it goes to Ethereum. So Ethereum is basically starting to bottom out now. As you can see, very little outflows last Friday. And then on Thursday, it actually had some inflows. So you can see it is starting to level out here. Now the price action is very, very bad for Ethereum, but I do feel that it will change and price action will resume to a bullish trend very, very soon. This is the total crypto market excluding the top 10 cryptocurrencies. Now, as you can see, this is not a time to be bearish on altcoins. Like, don't get me wrong, I know the title of the video was Don't Be a Hero, but this could chop around until the end of September, until we see the first initial rate cut. And as you've seen, we do have a lot of economic data coming this week, and then we have the CPI data coming next week. But as you can see here from this chart, so this is basically showing that most of the altcoins are actually below its yearly open. So, like, obviously, this can go lower. But in my opinion, if you have a longer term view, so if you're basically a longer term investor, this is a very good entry point for altcoins, in my opinion. So that is the video. I hope you got some value out of this one. If you do, please go down, hit the like, hit the subscribe, and I will see you in the next video.